So basically, ETF versus index fund.
Many beginners hear terms like ETF and index fund and assume they are completely different investments. In reality, they are much more closely related than most people think. A quick bit of history helps explain why both exist. The first index fund for individual investors launched in 1976. The first widely successful U.S. ETF launched in 1993. It was called SPY and tracked the S&P 500. At first, ETFs were considered a niche investment product and were not widely used. By the 2020s, ETFs had become one of the most popular ways for everyday investors to invest. In the past, many passive investors relied primarily on traditional index funds. Today, many passive investors use ETFs instead. That does not mean ETFs replaced index funds. But you might be wondering, what's the difference? One of the biggest differences is what types of investments are available. Some investment themes are available through both ETFs and index funds. Others are available primarily through ETFs. Let's look at some broad categories. Examples where both ETFs and index funds are commonly available include the S&P 500, the total U.S. market, the total world market, large-cap U.S. stocks, and the bond market. Then there are categories where ETFs have become much more dominant. In these areas, index funds may still exist, but ETFs are often much more popular. Examples include technology, dividend growth, healthcare, energy, small-cap stocks, and emerging markets. And then there are categories where you will often find ETFs, but may not find traditional index funds at all. Examples include artificial intelligence, robotics, cybersecurity, cloud computing, semiconductors, clean energy, Bitcoin, uranium, and the space industry. Today, in everyday language, ETFs and index funds are often mixed up, and the line between the two has become somewhat blurred. For example, when a 25 to 35-year-old investor says, "I invest in index funds," it often turns out that they actually own ETFs, such as VOO or VTI. So basically, index funds helped make passive investing popular. ETFs took many of the same advantages and made them even more flexible, accessible, and widely available. That is why ETFs have become one of the most popular investment vehicles in the world today.